Let's talk about the difference between a market weight versus an equal weight S&P 500 index fund. Let's start with talking about a market weighted S&P 500 index fund. So in a market weighted S&P 500 index fund, the companies with the largest market caps, aka value, will have the largest weight in the fund. As an example, let's say I invested $100 into a market-weighted S&P 500 index fund. Now, currently, Apple is the largest holding in any S&P 500 index fund, making up 7.41% of the portfolio. So that means when you invest $100 into an S&P 500 index fund, $7.41 gets invested into Apple stock. And Microsoft is the second largest holding at 6.74%. So that means $6.74 will get invested into Microsoft stock. Amazon is the third largest company at a 2.95% weight, meaning $2.95 will get invested into Amazon stock. Now, the 195th largest company in an S&P 500 index fund is Capital One, making up 0.1% of the index. Another way you can look at this 0.1% is that when you invest $100 into an S&P 500 index fund, 10 cents gets allocated to Capital One stock. Now let's talk about how an equal weight S&P 500 index fund works. In an equal weight S&P 500 index fund, every stock in the index has the same weight regardless of their market cap. So when you invest $100 into an equal weighted S&P 500 index fund, every company, whether it's Apple, Microsoft, Amazon, or Capital One, each of them get a 0.20% allocation. So out of the $100 that you invested, 20 cents goes into each of the 500 companies making up the S&P 500 index. Now, it's important to note that in an equally weighted index, the weights may drift due to performance, but upon quarterly rebalance, all companies will be reverted back to 0.20%. Ladies and gentlemen, financial knowledge is power. Please like and follow for more.